So thanks for joining us today. We have David Morgan from the Morgan Report, and we're going to talk all about silver because in a couple of weeks we're having Silver Week, which I'm really excited about. And I think that we are entering a bull market for silver, but I figured I should call an expert and ask him about it. So David, thanks for joining us today.
My pleasure. Thanks for having me.
So you were featured in a documentary called The Four Horsemen about the impending destruction of the global economic system. How would you update the thesis of this documentary to include what's going on with the current pandemic?
Well, it's a well-done documentary. Of course, I'm biased because I'm, one of the people that are in the movie, but I think it's very much accurate. X the pandemic, I think that the movie outlines quite effectively where we were and still are in the financial system, how unstable it really is, and that sooner or later something's got to give. We just didn't know, an overused term, black swan, when that would happen exactly and what the repercussions would be, which we're still going to be out in the future to determine. But this pandemic, I think, was just a catalyst for an already collapsing system. I do a weekly podcast called Weekly Perspective, and I look at all the mainstream financial news and some of the alt media, but mostly mainstream like Reuters and Bloomberg and CNBC and Market Watch and all these names that people know. And I've been telling people straight out that we were in a contraction, not an expansion on a global basis. And of course, with what's happened with the CV-19er, it's accelerated the whole thing, as you well know.
And where can people find access to your podcast?
Just go to my main landing page, themorganreport.com, and there's a free email list. If you sign up for that, all the interviews I do like this will be sent on a weekly basis, usually on the weekend. And also the blog page is very important because you get it free. Also have a Twitter and a Facebook and a YouTube and a LinkedIn channel, but that's kind of a subset. They're all on the blog. If you want to look at those, just go to the blog page. In the upper right-hand corner are all the icons for Twitter, YouTube, Facebook, all those icons. You just click those, you go right to that page.
And I think I was listening to your blog on Friday when you were talking about the movement in the silver price that day.
Right.
It seems to have an outperforming day. Do you want to talk a little bit about the recent price action in silver?
Sure. It's been a long time coming, and there's a lot of stale bulls and a lot of people have given up. And I'm not giving up because I'm stubborn. I'm giving up because I'm pretty certain how this is going to unfold, which means that the go-to investment is going to be gold. It's going to be a run to gold, and it's going to be a run to gold that's never been seen before. And the reason for that is we've never seen this type of an economic collapse on a global basis before. We've seen the 1930s, which are horrific, and they were more the United States. I'm well acquainted with the facts that it hit Europe and much of the world, but we didn't have this just-in-time inventory. We're so interdependent in those days. When the 30s happened, a lot of people were agrarian in the United States that could basically move onto the farm and grow their own food. That's not the case this time. So unfortunately, we're less prepared individually because we are much more of a technologically inclined society with just-in-time inventory where everybody depends on a supply chain that's been disrupted and will never come back to the same level that it was prior to the CV-19er.
Yeah, that's interesting. I would like to ask you about that, but rather than go down that route, I want to talk a little bit more about silver. And according to your research, which I read over the weekend, you believe that an overextended gold-silver ratio is a predictor of a financial crisis, I believe. Can you expand on this for our audience and how this might play out?
Yeah, there's a good article on Zero Hedge talking about the gold-silver ratio. I don't have it at my fingertips, but it talks about the last 200-to-1 ratios and what the economic problems were on those last two. And so knowing those, I just extrapolated that that's been a pretty good predictor twice in a row. This is happening with this situation we're discussing with this COVID. So to me, it is. I wrote, I think it was the April edition, the Morgan Report, with a quote that I'm not happy to report, but I think it's accurate. I'm not trying to be Debbie Downer, excuse me for that. I'm not trying to be a doomer, I'm just trying to be grounded, factual, but absolutely sincere with everybody. So I started that month with a quote, and I start every issue with a quote. And the quote is, "The next Great Depression will make the last Great Depression look like a small technical correction." And that came from a maverick economist named Elliot Janeway that passed away in 1993. But he was a free thinker, and he was talking about the markets being a large speculative casino back then, when the derivatives market were just little bitty babies compared to what the derivatives markets now entail. So going back to the four horsemen, we're basically well over leveraged in anything you want to talk about. The ability for the markets to reflect the physical economy are basically gone. And so we're in a system that basically everyone's pointing at these large numbers, or this currency's moving up, or this one's down, or this commodity's doing this or that. And most of it is almost totally irrelevant to the actual physical economy. And this is what we're going to see in spades and are starting to see right now. And this means food prices are accelerating to the upside because everyone likes to eat. In fact, if it's only essential that you have a service that you could stay open, I would argue that everybody needs to eat, so everybody's job is essential, so everything's essential. But excuse me as I digress. I'll come back to you.
Well, I've certainly learned the hard way what's not essential. Being an IR certainly is not an essential service. But going back to this silver gold ratio, I believe that it hit an all-time high in terms of the ratio at 125 to 1, which is unprecedented, I believe.
Yes. First time in 5,500 years of recorded history. Sorry if I interrupted, but I mean, it's not like a once in 100-year event or a once in, 1,000-year event. It's a once in 5,000-year event. And it's already moving back down. I didn't check the ratio today, but it's already, I think, at 105 when I did that update weekly perspective on Friday, just a few days back.
That seems like extreme, movement, right?
Right. Well, I probably didn't answer the question. Forgive me. I got a pretty active mind, even at my age. And, the implication, but yet to be determined, was that this is the greatest depression ever that we're facing. And I don't like saying that, but it's possible that it is. And if that is the case, then this ratio actually suggested that would be the worst ever. The two prior were horrible, but manageable. And I'm not saying this was unmanageable. All I'm suggesting is that this one could be severe and affect and touch almost everyone, and maybe touch people in a way that they hadn't expected. I mean, there's a big group, large amount of people that are real estate investors. And, I'm a big believer in real assets, and, improved real estate's a tangible asset. The problem is if you've got a, $20 million portfolio and it's $15 million worth of equity, but you got $5 million in mortgages and your rents go to zero, you still owe the mortgage company, you still owe the banks. So even if that much modest leverage, you still could be in a bind under these conditions. So there's a lot to think about in this new paradigm, which most people, in my view, haven't thought it all the way through yet, because there's more damage, I think, coming in the future, unfortunately. I'm not being a realist. I mean, you can make your own determination if I'm playing the fear card. I'm not trying to play a fear card. I'm trying to play the best analysis that I'm capable of as a human being that's studied this type of stuff for a number of years, and state flat out that you're going to have to become more self-reliant and really don't depend on your friendly neighborhood government to come to your aid. Not that there isn't some help out there, but you don't want to have to depend on them. You want to be able to depend on your own self-reliance and your basic near group, meaning your family and neighbors. That's what you're really going to get down to here, as far as I'm concerned.
So how does one protect their wealth in this type of environment?
Well, we're going toward a mixed scenario where, as I said, everything you need, like food, will cost more, and everything that's leveraged will probably decline. So, cars and even the real estate market, for the most part, will probably unleverage. So stocks, bonds, real estate, almost any investment class that you can name will actually probably de-lever and come down in price, whereas the precious metals will go up in price, and needs like food will go up in price. You'll see probably water, if you want to look at water, that will go up. Anything hardcore needs will be going higher. And this will be a bifurcation in the markets because at the same time, there'll be a deflationary situation in the financial assets, meaning stocks go down and even the bond market eventually will roll over. So, that's deflationary. But at the same time, my shopping bill keeps going up every time I go to the grocery store. They had to come up with a name called stagflation in the 70s to explain it. But really what's going on is there's a shift between the leverage in the market that's being deleveraged throughout the financial empire on a global basis that's so extreme, it's unimaginable. I mean, when you're talking a quadrillion, 1,000 trillion worth of notional derivatives, I mean, this is something you can't even get your mind around. So that's what's out there in the most junk, untrusted, unworthy financial assets you can imagine versus a food system that's breaking down not only in the transportation side, but also in the amount of being planted. And some of the silos that were holding reserves were decimated during some of the floods that took place in the Midwest. So our reserves aren't as good as they could be, and our planting isn't up to normal standards. And the weather patterns are shifting to a level that are going to create problems with the growing season in many areas that were once so productive. So we've got a lot of problems that are coming straight at us that most people are ignoring and just watching their Netflix because they're at home and, they've got more free time. And, I've always been kind of what would you say? I always like to deep dive on topics that interest me, and money's fascinated me, but money is just a thing. It's really how economic systems move and why currencies fail and what happens in situations like the Great Depression. And it's unfortunate that you can't print your way out of it because that's what we like. Everyone, even I, who's anti-fiat money as you can get, in a way. And I hope I'm not distorting the view people have of me because I want to be stable here. But in a way, I'd almost wish you could print your way out of it because it's not going to be fun when reality hits the street, when the rubber meets the road, as the expression goes. And there's no way you can print your way out of it this time. It kind of worked in 2008. This time, it won't.
So you think things like precious metals, water,
food,
maybe logistics related to food, those are the categories that you'd be looking to invest in?
Yeah, and there'd be, other upstarts. I mean, when it does like a deep cleaning service, right? You put three girls together that are entrepreneurial and they go into the office and they, make up a certification. We have scrubbed, rubbed, and dubbed everything in the office. It's like as germ-free as it could be, and go to the next office. There'll be a big demand for that. And even in the Great Depression, there were great opportunities. It's just that people had to fill a need. It wasn't a want. It wasn't like the shiniest new car. It's what was needed now. And, the Jiffy box of cornbread comes to mind, and that started the Great Depression. You think you wouldn't want a ready food. But no, people liked it. It was something that they could buy. It was comfort food, and it was prepackaged, and it was easy for them to make. So there was a need that was fulfilled by a company in kind of the bottom of the Depression that actually came to the fore and made money. So there's opportunities everywhere. It's just seeing them and being grounded enough and looking for, again, a need, not a want, because we're past I want this, I want a bigger yacht, a bigger house, a better car, a better neighborhood, all that stuff. Put that on hold for a while. Not that you might not be able to buy some, exotic car at half the price it sold for in January, but that's not going to be the motivator for most people anymore. What's going to be the motivator is day-to-day living.
Yeah, I think you're absolutely correct there. So just going back to precious metals, because that's a sector that you and I both know quite well. So we have seen silver outperform gold recently. What do you need to see to say we're in a bull market for silver? Because it has been a lagging trade.
Oh, really? Yeah, I need to see it above 1850. I need it to be there at least 3 or 4 days in a row on better than average volume. And then the next place could be in the 20s. 26 is a magic number. Silver held above 26 3 times. And then the fourth time, it went below it. And from that time until today, it's been mostly in a bear market. And luckily, I caught it on the fourth time, and I put on alert to our paid members and said, hey, if you're a hedge fund or have a big position, you better prepare for below 26 and hedge. And I had a couple compliments from people for tipping them off, so to speak. Didn't have a lot of time. I mean, when I see these things, it isn't like, oh, it's a year out. I mean, it was like within a couple of days, but it did happen. And from that point to now, most silver people are just disgusted. And, you can hardly blame them. But the point I'm making is this. Once we get above probably 22, 24, it's hard to say. There'll be an acceleration. We'll probably go through that 26. Once that's accomplished, we're really on our way. And I'll say it again. I've said it before. And this is something that you know and I know, but most don't. There'll be a lot more silver purchased above $30 an ounce than there are below $30 an ounce. Most people, especially on the silver side, will buy it high. They love paying high prices for silver. Now, the real smart people are buying it now, and this is forcing a huge retail market bid-ask spread where the premiums are huge because it's extremely difficult to source silver right now. So once this thing accelerates, you're going to see silver get back to the 100 to 1, then 90 to 1, then 80 to 1. That's sort of the starting point as far as I'm concerned. Once we get below 70 to 1, that ratio, then I'll be convinced by the market, not by me. The market's telling me loud and clear we are definitely on our way. Where is it going to get to? I would say 35 to 1 as a minimum. That's what we've already seen in 2011 when silver hit roughly $50. The gold-silver ratio at that time was about 35 to 1. During the Hunt brothers, it hit 16 to 1, which is what I call the monetary ratio. And that was intraday. I mean, it only lasted a day or two. But this time, I think with the run to gold, it's going to be so immense. And it's going to be not only banks, but even central banks, nation states, sovereign wealth funds, pension funds will come in late. A lot of high net worth investors will come in late. So you're going to see a run to gold like you've probably never seen before. And that will spill over in the silver market, which is a much tinier market. And it's much more affordable. So I do think the gold-silver ratio will get down to probably that monetary ratio of like 15 to 1. But, again, I'll be humble. The market knows more than anyone, including yours truly, and we have to see how it unfolds. There's a big push still for the metals to take a secondary position relative to what the new currency reset will look like, and that's being pushed into the digital world. There's very little doubt in my mind that they want to destroy cash. They don't want any cash, they meaning the banking system at large on a global basis. And they also want to go to a digitized monetary system, either on a nation-state basis, which is probably the most likely, could be the SDR that Jim Rickards talks about, could be a combination of those two or 3 or 4 or 5. I mean, a lot of nation states. China's got, I think, 85. I just wrote about this morning report, I think, 2 months ago. China has like 85 different digital currency platforms that are being proposed, and they're already basically all digital in the cities. You don't have any cash available to you. You do everything by your phone with the We Something app or the Tencent app. Everything is by your facial recognition. You walk into a store that has no one in it of a human variety, just a machine. You put your goods on a scanner, and then you pay with your phone and you walk out.
Well, talking about digital currencies, which I actually don't know that much about, I didn't represent any companies in the blockchain or cryptocurrency space because I thought it was a bit of a bubble. I think the core technology is really interesting and clearly it's being adopted. But in reading some of the literature on your website leading up to this interview, I didn't actually realize that some of the digital currencies were backed by hard assets. Is that true? And is silver Yeah, I wasn't aware of that. Can you talk about that a little bit?
Sure. And first, let me just preface it with we've been reporting on the digital currencies in the Morgan Report for our paid members for quite some time. And I am not the expert. I'm acquainted with it, probably above average. I love to learn new things. But David Smith, that works for me, has pretty much taken on that mantle, and he's pretty dug in pretty deep on it. But yes, Deborah, there are silver and gold backed cryptocurrencies. A lot of them are falling away because there are regulations out there that they're unfamiliar with and haven't abided by. I am biased because I am associated with one called the LOAD program. You can find out about it. It was a basically silver-backed cryptocurrency. They've recently added gold, which is okay by me. I'm kind of a purist. I wish it was just silver because it'd be the only one probably with just silver, but it's AG, which is the atomic, designator for silver on a periodic table. So it's ag.lode, LODE.ONE. That is a URL. Just go to your browser and type in ag.lode.one, and you'll jump right on the website. It explains it in greater detail than I have time for.
Okay, interesting. Well, thanks for explaining that. And I want to shift the conversation back to silver. There's still a couple questions that I have. So in the markets, people have this old adage that you sell in May and go away. And the market's had a pretty good run over the last little while. What do you think about this in terms of precious metals? Do you think that you sell here, or do you think that you hang on for a summer trade?
That's your tough question. It really is. I've used that in the report more than once, I know, and it's worked out perfectly for the precious metals several times. The European market that dominates that pricing mechanism, usually through London, most of those people in the old days would take these extended vacations like a month or long. So there was a much less robust market in the metals during summer. So you almost always see gold bottom in August, and then it would come back. So it fit perfectly. Sell in May, come back after Labor Day, and away you go. This time I'm saying no. It's a guess. I don't know yet. I do think we could get a correction in the metals only because I think we're going to see another big down wave in the general equity market. So if the Dow sells off in a manner that we've already witnessed here, I think if it's strong and long, if it's a big sell-off, we'll see the gold market and everything associated with it go down again. But we've already seen it go down and how fast it came back up and how fast the gold equities came back. So the best thing in a bull market is just basically get on relatively soon and hold on through all the thicks and thins, because the bull market's function is to shake off as many people on its back as it possibly can. And the best thing is to buy a position and ride it all the way up, because there's going to be several times where people will want to give up on that bull market. And just when they sell out, the next big leg up starts to take place. So buy right, sit tight, buy the highest quality that you can. That's where, my work comes in. Some of these names are well known, but people don't realize the best way to invest is what I teach, and that's big money in big companies, medium money in middle companies, and bet a little to win a lot in the speculations. Most of my peer group specializes in what I call the penny dreadfuls, these small itty-bitty companies, and I have some. But I weight the portfolio accordingly, that if you put a lot of money into the pennies, you're doing the wrong thing. You bet a small amount on those, and if you get that 1 in 4,000 that becomes a mine, you're going to make a lot of money, like we talked about pre-show, where I named a few that we've done in the Morgan Report in the past. No guarantee we'll do it in the future, but I do have a few that I really like.
So now that you've given us a little bit about how you would weight a portfolio of investing in silver, what is your preferred way to play silver?
I've always taught that you should own a real metal first. I think if you're going to be a metals investor, you should be acquainted with the metal. So for most people, I think you should have both gold and silver. I've even recommended palladium way back when it was cheap. But once that's accomplished, the best way to get the most leverage with the least risk is through the equity market. That's where you can get these stocks that do go from 60 cents to $60. It's very rare they do that. Most people, again, in the investment newsletter business, that's all they really talk about, but they're talking about something that has the odds stacked against the investor. I much rather make, money over time. I mean, one of the premier investments that we made was when Franklin, Nevada was spun back out of Newmont Mining and became its own entity again. It was like $19 a share. And that stock's making a run at 150 right now. I bought it around 20, but I added recently at 118. And that was just a month and a half ago or a month ago. And that's at 150. So do the math, $30 on $118 stock, but still $30 is still a pretty good move, especially in a market where a lot of these other stocks are going sideways or down in the sector.
Well, that's a great return. So what do you look for when investing in a silver company?
Well, I do more than silver. I've done everything. I've done rare earth elements, and I've done molybdenum and copper, and you name it, I've probably looked at it. But right now we're focused primarily on the precious metals because that's what the market is telling me. The market's saying these are going up and everything else put on hold, save uranium. We just put on an alert for uranium. It's starting to move. So I'll let the market dictate what part of within the resource sector to be focused on. And I look for money and management primarily. It's the money. Do they have the money and do they have the management? And I focused on royalty companies and streaming companies primarily because regardless of what the price was for the product, silver or gold, these companies were making money. So a lot of people were amazed that we could be making money during this very trying period of this, very poor gold and silver performance over the last 6-7 years. Now, not to say that every one that I chose went up. I'm not saying that. We still suffered, but those stocks are still here. They're still, maintained and that type of thing, where many of my peer group that focus primarily on these junior companies are out of the business because those companies didn't have any cash. They might have had great management, but they ran out of money and they're gone.
Interesting. Well, you can't pick all winners, which is why you have your asset allocation. Some small, some larger. Makes sense to me. So you're a follower of the Dow theory, correct?
Right.
Can you explain the Dow theory as it relates to metals and what phase you think that we're currently in and why you find this a useful tool for investing?
Yeah, well, Charles Dow, and I'm probably not going to do a great job, so you could Google it and get a better one. But Charles Dow basically said if the industrials are going up, I need confirmation that the transportations are supporting that, because if the industries are producing, they've got to be transported. And so one confirmed the other, so to speak. And I think the same thing in the metals, that if gold is running by itself and silver doesn't confirm it, or vice versa, then we've got something going on I really have to think about. And as the great Ayn Rand used to say, and I don't agree with everything from her, but she's a great thinker, in my view, said, check your premises. So I'd have to go back and think about it. And we've really kind of seen that until, just before the interview. I mean, Friday was a great day for silver, but one day doesn't make a market. And today it's doing well again, and the ratio is dropping, and everything's kind of falling into place. Probably not as soon as I'd like it to. I wish it happened, 4 years ago or something, but it's today, and that's the market we have. And silver is starting to confirm again. 1850 is my magic number. Is that like in stone and it's etched in stone? No, it's the way I look at the market. It's the way I see it. It's been a call of mine for quite some time, and it's a confirmation. But is that the exact point in time where it's perfectly aligned that proves it? No, it's an art, not a science, but I've been at this a long time. And, I think if you want to be really conservative, you want to say 20, you want to get about 20 U.S. terms. I mean, you got to remember, and Deborah, I know you know this, but gold's been making new highs in almost every currency worldwide, except the U.S. dollar.
Yeah, gold's had a massive move since March. One of the things that I find interesting that you say is, I think it's a 3-to-1. When silver starts to outperform gold 3-to-1, then you start to really sit up and pay attention that we might be entering a bull market for silver, which I thought was a really interesting thing to watch for, because there has been days where silver's up like 5% or whatever, and gold's been a little bit flatter. So I think we are starting to see that outperformance. But yeah, like you said, you've got to wait for some sort of confirmation. And it has been slow to come with silver, as you mentioned. It's been slower than I would have thought. Usually it tracks gold a little bit better. Do you think that this is because silver is also an industrial metal, not just a store of value? Do you think that's part of the reason there's been a lag?
I think it's a great deal of the reason. I mean, I've started to do this lecture and I've done it about 4 times now and I keep tweaking it a bit, but it's what if silver is treated like gold? And I looked at the ratio slightly differently I spoke about it differently than I have in the past. Basically, when gold and silver are money, the ratio has been 20 to 1 or lower. So when they serve the same function, silver is far more valuable as money than it is as an industrial commodity, which in a way doesn't make sense to my thinking because, if you had something that's valuable as silver monetarily, and it also had all these other uses, it'd be more valuable. I mean, if I'm going to hire a personal assistant and all they can do is email, that isn't as valuable to me as an assistant that comes in and says, I can do, everything in Microsoft Office format. I can take your kids to school. I can tutor your dog. I can, there's 12 things that they can do beyond that. I'd say, well, that's worth more to me. I'd pay more. But that's not the precious metals. Coming back to the point, I probably elaborated too much. When silver is treated as only an industrial commodity and it's bifurcated from gold, it's cut from the monetary system, which happened in 1873 officially with the demonetization of silver. And I go through this in my lecture, where the silver is treated like gold. So it went way back to the Wizard of Oz, which is a metaphor for the Eastern economic establishment going to a gold-only standard. And then you go a step beyond that. There's a paper written called Gold Standard Equals Fiat in Disguise, which makes a great argument for when you go to gold only and the only thing you can measure is gold price in is paper. That paper could go to infinity, so gold could go to infinity in price. But if you had to measure gold in terms of silver units, it would be a policeman on both currency or both monies. You would have only so many units of silver to trade for gold, and you don't want to fix it. You want the market to determine that. And that's what happened during a lot of phases of monetary history where England was losing all their silver to the Chinese, and so they hooked them on opium and got their silver back. But that's another story for another day.
Sounds like an interesting story. Maybe I'll have you back for that one. So going back to kind of silver's multi-uses, like it's a store of value, it's an industrial material, which I think my view is the economy's, like the global economy stalled, right? So you're probably going to see a resurgence of some economic activity starting now and like weighted towards the second half of the year. So I think its use as an industrial commodity will start to also benefit from that impact. Maybe you see a move in copper. I think that the manufacturing and construction sectors are probably going to be put back to work first. I don't know if you agree or disagree with that assessment. But also silver has antiviral and antimicrobial components, which I don't think has been really expressed in the market yet. Do you think that there's potential for that to add momentum to the trade, or do you think that's largely irrelevant at this point?
I think it's actually more relevant than most people think, even though it's at the nano level for like colloidal silver water and things like that. But I want to go further on the previous question, and I'll answer this one as well. If I get sidetracked, bring me back, please, Deborah. But
I might
the idea, the idea of silver being a biocide was put out by the Silver Institute so many times, but one of the proposals was to coat wood products for playgrounds, for like all the parks and all the schools, and it would prevent bacteria situations for like the children playing on these things, and also would last longer. There were many benefits for using a very small amount of silver on this wood, but that alone would have kind of sucked up all the silver supply. So the point I want to make is that even though I make the hard case for silver as money, and I will not probably renege on my position, I could also argue that, all right, forget about it being money. There could be a technological advance that takes it like palladium, because palladium technically is actually money based on the classic definition from Aristotle, but forget about that, because the reality is no one thinks of palladium as money, but they think of it as a great metal to make a lot of money in, because it's gone from 600 to 2,200. Silver could be where both of those effects take place, because silver's use in batteries really hasn't been explored to the level that it needs to be. I mean, I jokingly said if Elon Musk really was with it, he would have used silver batteries and not lithium batteries. So when you buy your Tesla, you're paying more for it initially, but silver is so cheap up till now, you could recycle those batteries and pay for 3 Teslas by the time you needed to replace the batteries, because there was so much silver in the car. But joking aside, there are a lot of benefits to silver-based batteries, and this will start coming out more and more. A lot of new technologies will probably use silver in some form. And to buy a side of properties, I'm going to leave for my members only behind a firewall. The reason for that, Deborah, excuse the paranoia, but the truth is, anytime you start making any medical claims, which I'm not a doctor and I don't make any claims, I basically show the research, but even doing that, I feel vulnerable. So my public announcements about silver and its benefits from a medical perspective will probably be for subscribers only. I might do it in a very vague way and have the lawyers check it before I do anything outside of the in-house, so to speak. But there are some very interesting characteristics that are provable by science that are very beneficial to organisms. I'll put it that way.
Well,
yeah, I think there's something there, and it's, is it a mover of the price? Maybe. I think it's more likely that the battery situation, the new electrics, things that are coming to the fore for the new energy. I mean, California, for example, any new house has to employ solar. Okay, well, that means silver. So there's going to be a lot of demand on both the monetary side and I think the industrial side.
Interesting. Did you want to comment about the economy stuff that I mentioned at the first part of that question?
Yeah, I think that there'll be a run to, the economic condition will settle in at some level. It's going to be a lower standard of living for almost everybody, but at some point it will stabilize, and nature abhors the vacuum and it seeks balance. So there will be a balance, let's say 2 years out. I don't know. I'm just giving the idea, not the exact date. So please don't troll me too bad if it's 2 months, but I think it's more like 2 years. But at that point, we'll pretty much know what we've missed and what we've done correct. In other words, maybe the food situation will right itself in some ways, but you won't have the variety of foods in your, Canadian shopping center that you had a few years back. You're just not going to get grapes in the middle of December anymore, that type of thing. So I think there'll be stability, but I think the general trend, as I've said several times, so what will happen is that the wealth preservation characteristics of the precious metals will accelerate, and they'll hit some level. And depending on what the monetary authorities do during this reset that we're in, do we go to an all digital currency? Are there alternatives with gold and silver, which there are? How much of the public will go to those? How much of the public will be forced into government edict cryptos? Cash is trash. You're not going to be able to use it. It's going to have too many marks against it. There's going to be basically at some point, I believe strongly, where governments of all stripes will say, no more cash. You have until, August 5th, pick a year to turn your cash into us at the local bank or post office or both, and get your digital credit for that cash. Oh, by the way, as long as it's under this amount, you have nothing to worry about. But if it's anything over that amount, be prepared to show us why you have that much cash or whatever. So it'll be what happened in India. Some of these things really on a global scale, when you think about the bankers run the world, which is my view, is they do these things in nation states like India. To them, it's just a pawn in the game. And they see what the Indian citizenry does when they outlaw these larger notes. which great vast amount of the Indian economy was run on cash, run on pieces of paper. And then when they made it semi-legal to own it, but you had to turn it in and change it into a different denomination and all that, it devastated a lot of people for quite some time. Basically, the bankers want everybody to be banked. They want everybody to be known to the nth degree with like a 2020 ID system where no one escapes. Everyone is in their system and every transaction is monitored by them. And they don't care what country you're in. It's a global system. It may be a nation state system at, on surface, but it'll be globally adopted because every nation state will share with every other one. And then to make it convenient, they'll probably just go to one like reserve currency like the dollar is now. Sure, there's a euro and there's a yen and everything else. I'm well aware of that, but basically everything rides off of what the conversion rate is to the US dollar. So it'll probably be similar to that. Everything will be based on the conversion rate to Bitcoin. Although I don't see Bitcoin as being the leader eventually. I think it'll be a government mandated digital currency. Not that Bitcoin won't exist, but no one, in my view, is going to adopt Bitcoin as their national currency. They'll start their own.
And do you think it'll be backed by a hard asset?
No, not the government ones. I think the alternatives will be, or some of the alternatives will be. It could be. I mean, I want to rule it out. I want to be clear, and it's a very good question. Depends how bad the trust is lost. I mean, if the system goes further than the bankers think they can control it, they may be forced to put up a digital currency that's gold backed just to assure the public at large that there's something of value backing this new system. So it's possible that they'll be forced to do it. But I think, especially what I quoted in the Morgan report 2 months ago, I mean, this Mark Carney character said that they definitely want, and I quoted him, an unbacked digital currency without limit. So modern money theory, you can digitize as many bazillions as you want, doesn't matter, and it's backed by absolutely zero, and we're running the system and get used to it. We're the bankers. You're the peons, we're the bankers, we run your lives. That's the basic takeaway.
Yeah, well, we're certainly seeing a lot of devaluation of currencies internationally right now. And I would suggest to viewers to watch the documentary that's on your website. I found it very interesting. And then I guess the only question that I really have left is just going back to the trade in silver, because that's what we're really here to discuss. We've seen this huge overextension in the gold to silver ratio, and then it started to contract quite aggressively over the last couple of weeks. We've seen outperformance in the gold price, outperformance in silver of the gold price on specific days. I know you're waiting for the confirmation of 1850, but it does look like there's a trade in silver that's developing, whether it's short-term or long-term. And one of the things that I found interesting, again, reading your research, is that a gold bull market will last longer, but a silver bull market will be shorter, but much more aggressive in terms of price appreciation. Do you want to talk about that a little bit?
Well, I've said in the old days, remember, gold went from 1999 to 2011. Every year over year, it was up. So that was an 11-year bull market. Yeah, there were some corrections. And as I said, bull markets try to shake off many investors, and many got shaken off a few times and never to come back. But silver was actually outperforming gold in a few of those years. So I would say, and it was true at the time, that gold will preserve your wealth, but silver can make you wealthy. I mean, silver went from the 5 to 50, and just the metal, not talking the equities that you get super leverage on. In fact, some of those were like a 5 to 10-fold increase over what the metal itself did. But coming back to your question, so silver went up a 10-fold, gold went from 292 to 1900, so 300, so about 6-7 times, so pretty close to each other. Silver did outperform gold somewhat, but that was the mid-leg of the market up. And then this correction was much longer in duration than I expected it to be, which means the next leg up will probably be not only the biggest leg of the 3 legs up, it won't be long in duration relative to the 6-7 years. I think it's more like 3 or 4. Time will tell. but it will be the biggest one. For example, I've said in a previous set of interviews and lectures that I've done that 90% of the move comes the last 10% of the time. When silver was taken off of the the paper dollar, the silver certificate ended in 1968, but silver was taken out of the coinage in 1965. And from 1965 to 1979, silver went from the $1.29 an ounce monetary value to about $6. And even on an inflation-adjusted basis, you made some money over that, 14 years or whatever it was. But if you bought silver at $6, the all-time high in January of 1979, and cashed out in January 1980, 1 year later, it went from 6 to 50. So you had an 800% increase in 1 year. So I actually did the math. 90% of the move comes in the last 10% of the time. It turned out to be 87.5% of the move came in the last 7% of the time. So it's not something you can hang your hat on, but this is how all markets move. And the 90-10 thing is just a metaphor for get ready for the biggest move up, and it does accelerate. And you don't want to be left off that bull when it really starts to move. And it's scary because you're going almost straight up, and no market grows to the moon, even silver or gold or the real estate market or the stock market or even the bond market. All of them have their days in the sun. So silver's time to shine is ahead of us, but I think it's going to do spectacularly well once the gold market gets into the like $2,500 range, US dollars. I think you'll see the acceleration start about that monetary level, but again, time will tell. It will start. It's hard to ever say when, but again, I don't think we've got 7 years to wait. I think we've got, a few years. I think, and you buy gold at 2,500, and people will. Oh my goodness, I could have bought it at 500. That's not the way to think about an investment. You get in when you get in. Most of your best traders and investors get the middle. For example, that move from silver from $6 to $50. I mean, who would pay $6? It took 14 years to get to that level. Well, some people did. And there was one trader that got in at like $13 silver and got out like $32 silver. And that trade was just a few weeks long. And he retired for life. And he was only in the market for a matter of weeks. And that's taking the middle. We talk about that in Second Chance, how to make big money during the coming gold and silver tsunami. So there's lots of techniques. It depends on your personality, how mentally prepared you are for it, et cetera, et cetera. But as they say, there's more than one way to skin a cat. And I'm not suggesting that anyone do that type of trade. What I am suggesting is that most people don't know how to invest properly. There's nothing safer than buying at a new high. You want to buy at a new high when it's relatively a brand new high, or making the second new high or the third new high. But if a stock goes from 5 to 50, or the commodity goes from 6 to 50, how many new highs does it make? And the answer is a lot.
True. Yeah. Well, thank you very much for answering all my questions. Is there anything that I've missed? Anything that you want to add to the conversation?
Deborah, I've got a headache. No, no, you did a great job. I appreciate being with you. It was a lot of fun. I just throw out, if you want to get more information, go to our landing page, themorganreport.com. If you're interested in these type of interviews, go to the blog. Over on the right-hand column of the blog, there is a little block ad for how to buy precious metals very close to spot. Right now, you can get silver at about 6% over, which is cheaper than anywhere else I'm aware of. But it's only available for Canadians and U.S. citizens. So if you're watching this in Australia or Europe or South America, sorry, I can't help you. But that program is set up for both the Canadians and the U.S. people.
Okay. And actually, I had a question about the premiums, because we have seen massive premiums in gold and silver. And you discussed it earlier, but you actually didn't go into the dynamics of why that is.
What happened in 2008 during the financial crisis, at the bottom of the market, silver was around 9, and most of the dealers were selling at 13 because it was really, really, really hard to source. And so people were panicking, knowing silver and gold were the place to be because of the financial situation, and they ran into the metals. Eventually, the market righted itself and brought the premium back down to normal. And I wrote about that ahead of time. This time, it may be different. I don't know for sure, but you want to have some metal, even if you've got to pay. I want people to pay a high premium. That's why I outlined what I said. But it's indicative of the real market, just like the palladium market. You could talk the talk, but when you got to walk the walk, you got to pay what the market demands to get the physical metal. And that's the same thing right now in both the gold and silver markets. And whether or not they'll come back to normal remains to be determined. Because of the supply disruption and the supply chain, a lot of the primary dealers that are wholesalers are unable to fulfill nearly the orders that the demand has for product, and they're also having trouble transporting it. So their prices have gone up. The mint has increased the cost to the primary dealers by 17% recently. So this time it looks to me as if it could be different, where these premiums that are built into the market are going to stay very large. You're going to have a bid-ask spread that's abnormally different than what it was in years gone by.
Is that a bullish signal?
It is. Yeah, you're only going to pay a big spread if you're bullish. You're not going to pay a big spread if you think the market's going to collapse.
Well, it seems like we're seeing a lot of bullish indicators for silver, and gold seems to have had what I would consider the start of a bull market since March. So thank you for your time. You've shared with us a ton of free information. So I would say that there's definitely a lot of value in subscribing to the Morgan Report. So I'd recommend that people go to your website and check it out. And people should also subscribe to the Adelaide Capital YouTube channel. That's free. And if you like this video, make sure you like it. And David, thank you so much. I hope that you participate in our Silver Week in some capacity.
Love to, Deborah. It was a pleasure, and you had some pretty powerful questions, but it was very good. I really enjoyed the interview. Thank you.